If you search for AI trading online, you will inevitably find people selling fully automated bots that supposedly print money while you sleep. But let's be realistic. If someone actually had an algorithm that guaranteed infinite returns, they wouldn't be selling it for $50 on the internet. The problem is that modern trading requires a single beginner to simultaneously act as an economist parsing global news, a mathematician calculating complex lot sizes, and a risk manager keeping it all together. This cognitive overload is exactly why beginners get manipulated by market noise, and experienced professionals eventually hit a wall of total emotional burnout. Real AI integration functions as a step-by-step assistant that handles the heavy analysis, raw math, and psychological checks while you remain in control of the execution. Adopting this assistant mindset shifts you from a gambler hoping for a magic shortcut into a CEO managing a team of objective, highly skilled experts. The simplest starting point is offloading your daily fundamental research. Instead of spending hours reading economic reports, you can prompt an AI to summarize the upcoming economic data for specific assets like gold. You can then command the AI to cross-reference those macroeconomic factors against tech-heavy indices like the Nasdaq to see how different markets might interact. This means when a high-stakes catalyst looms, like an upcoming earnings report from NVIDIA, the AI parses those corporate results into a summary of market sentiment. For beginners, terms like the PCE price index can be intimidating, so you can tell the AI to translate. By asking if you should be defensive or aggressive today, you get a clear, actionable starting point for the session. Replacing hours of manual research with a 60-second summary allows a beginner to cross-reference multiple catalysts before the market opens. This bird's-eye view makes it much harder to be blindsided by random price spikes or manipulated by sudden noise. Once you start trading, the logistics of risk management become difficult. If you have multiple positions open at different prices with varying lot sizes, calculating exactly where to take profit to hit a financial target, like passing a prop firm evaluation, is a major headache. Instead of doing the math manually, you can simply feed the AI a screenshot of your active MetaTrader positions and specify exactly how much money you need to make. The AI reads the image data, runs the average entry prices, and identifies the exact take-profit level you need to set across all those overlapping positions to reach your goal. Offloading this position sizing math to a machine helps eliminate the errors and overtrading that happen when a trader has to guess their targets under pressure. Even with a perfect plan, trading remains highly emotional. You might enter a valid setup, but then feel an irrational urge to close the trade early because you are afraid of the price fluctuation. In this scenario, uploading a marked-up screenshot of the live trade acts as an objective validation check. The AI can analyze the chart structure against your predefined strategy and confirm if the trade is valid. To reduce anxiety, the AI can suggest rational steps, such as locking in partial profits or moving the stop loss to break even once a certain threshold is hit. Outsourcing this mid-trade validation to a machine removes the human burden of guilt. Emotional discipline becomes a strict mathematical process rather than a constant struggle with willpower. The highest level of this upgrade system is engineering your own tools. By using advanced AI models like ChatGPT Premium or Manus AI, you can build custom chart indicators specifically tailored to your strategy without writing any code. You describe your exact entry rules in plain English, and the AI translates those instructions into a raw block of PineScript programming code. Pasting that generated code into your charting software automatically highlights your preferred entry boxes and trading sessions directly on the screen. This technical integration builds a personalized, automated surveillance system, allowing you to operate with the precision of a software engineer. However, we have to recognize that AI is an imperfect machine. Despite its analytical power, it will occasionally misinterpret visual context on a chart. For example, an AI might incorrectly identify a standard price move as an Asian liquidity sweep, simply because it doesn't understand the human nuance behind that specific pattern. This is why the trader must act as the final quality control layer, constantly backtesting the AI suggestions against their own experience and historical data. The machine can map the route and handle the math, but the human trader is the only one who can legally and practically pull the trigger on a live trade. AI exists to make a smart trader's life easier and their execution sharper, but total reliance on the machine will destroy the very edge it was meant to help you create.